Hey everyone, it's Evan here from the Trade Risk on Tuesday, December 19th here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Today's video, we're going to be discussing stocks pulling back, filling in some of yesterday's gap higher. We're still waiting on the Senate vote on the tax bill. Might be happening later today, maybe early tomorrow morning. And we also had rates, which were popping today. Bonds were pulling back. We're going to talk about all of this and some more right now. All right, we'll jump in here with the S&P 500, the SPY ETF. You can see we finished down 1 point here on Tuesday. That's down 38 basis points. And we're starting to take out what we clearly took out Monday's lows, and we are falling into the gap here that was created on Monday's session. And in fact, we actually shouldn't even be looking at the SPY ETF. We should be looking at the cash market still, because we did have the SPY ETF go ex-dividend last week. So that chart looks a little more bearishly skewed than it otherwise should be. So really we want to be looking at this cash market here, and same exact principle here, down 32 bips, almost 9 handles. We're taking out yesterday's lows and going into the gap from yesterday. Now, before we look at that daily chart, let's first look at the weekly here, and you can see once again we are actually still positive on the week so far. It is only Tuesday, but yesterday we had some good gains. We pulled back, retraced much of them today, but still up here on the weekly chart and still above last week's high. I like to always just glance here at the weekly chart to start the videos to give everyone some perspective, especially if you're an intraday trader or a short-term swing trader. You can really get lost in the weeds here on a day-to-day basis. If you're looking at 60-minute candles or 240-minute charts, daily charts even, the weekly shows the nice picture. And in fact, I have MACD on my chart today. And you can see even the MACD here, momentum oscillator, is actually still making new highs here, and that's certainly a sign of strength. Again, as we've sort of been talking about, trend and momentum have been persisting here to the upside for the bull case in the S&P 500. Doesn't mean we can't pull back. We can certainly have a mild 2 to 3% correction at any time, but generally speaking, you know, a MACD at highs here, making new momentum highs in the context of an uptrend is a pretty bullish characteristic. So if we go back down to the daily chart here, we can see we are starting again to work ourselves below yesterday's open. We did, yesterday's open, and we are coming back in to fill this gap. Notice where we are in relation to even the fast moving averages here. So again, 8 period, 20 period on my chart, blue line and yellow line respectively, both bullishly aligned, both heading higher. MACD still basically at highs here on the daily chart as well. And you can see we're still way above the 8 EMA. So a little bit of a pullback here is completely normal, healthy, and should almost be given even for the strongest types of trends here. So, you know, as we look at the action this week, nothing really has changed. The trend remains higher. Momentum continues to make sort of new highs with this market, and the bulls very firmly in control. Now, we do have, again, the tax bill, which is just making all the headlines here with, you know, the latest sort of polling on who's got support, who doesn't. It does have sort of one round left on the Senate, which might be happening later today, tomorrow, who knows, later this week, whenever it gets done. But that will certainly still give the market some anxiety, and that is a real catalyst. If for some reason we cannot get that through the Senate, that would be a risk to this market for sure. But as it stands right now, from a technical perspective, everything here is still lining up in favor for the bulls. Maybe we come back down and fill this gap, maybe retest the 8 period. Where things get interesting to me, where I start to take a little more notice on a pullback, would be right around this 2660 level here in the SPX. If you're looking at the SPX, if you're looking at the SPY, I think it's around 266 or so. If we started to break below, you know, some of these recent highs in here, this kind of breakout above this early December highs that we just had sort of happen underway here just late last week. That would start to get me maybe a little near-term conservative here, for especially for the momentum plays, or to dial back some of that upper level frothy sort of exposure if you have it. So that's the sort of line in the sand that I'd be paying attention to, which, you know, realistically is only about 1% or so away, but in the market of very low volatility, that tends to be a pretty, you know, would be a pretty sizable move if we started to come back down and take out those levels. levels. So that's the near-term SPY level I'm watching, S&P 500 level I'm watching. Otherwise, another day of pullback or another day of kind of stabilization above the 8-period EMA, and that still looks good to me on this uptrend. If we go to the IWM, basically same thing here. Damage was a little bit more, or a little bit bigger of a pullback, 79 basis points to the downside. You can see we opened right at yesterday's highs, and we made some progress filling that gap. We don't quite have the same sort of bullish outlook here like we do for the SPY. I mean, it's definitely in control by the bulls here. We are above a rising 8 and 20 period moving average, but notice momentum is still kind of not quite making new highs. We're still below the highs here from Monday on the 4th, so earlier this month. So the IWM, while I would say that we did just kind of bounce higher off of this 150 support, I think that's constructive. We still don't have the oomph behind it like the S&P 500 does. Now maybe that quickly changes if we start to take out these highs here at 154.50, start making new all-time highs, get these moving averages kind of starting to signal that momentum is building to the upside. Those would all be positive developments, and I certainly put that in the very real realm of possibility into the end of this year. So I wouldn't not want to be shorting the IWM at this point. I don't see enough reason to. I guess if you're really actionable, you could be looking at this as a potential double top here, but to me that's just too aggressive. I don't mind it as a hedge per se, but to get outright bearish there, unless you have some insight on maybe this upcoming Senate vote. I don't see too strongly that type of scenario yielding some great results there. Finally, the Qs arguably hit a little bit harder today. I know the Qs don't necessarily show it, but I know a lot of the tech names were getting hit or were beat up, at least intraday at the lows. They did recover a bit here at the end of the day. Structurally, though, I mean, everything is still, kosher here to the upside for the bulls. We're making new highs. We have the 8 and 20 period above us. Trying to build some momentum here to the upside. 156.60, that's sort of my line in the sand here for the Qs. If we were to suddenly fall back into this old range, then I would say this could be a potential false breakout at hand, and that would get me a bit more defensive, maybe put on some hedges or dial back a little bit of that exposure. So that's the market environment overall. Structurally, I think kind of the same narrative is in play here, a little bit of bumps along the way, but that's to be expected. Let's see how the rest of this week turns out. Let's pay attention to those weekly closes. So that's the market environment. Let's take a look at TLT, which really got hit today. We had rates all around rising on the day. We had bonds pulling back, and now if we go to the weekly chart here, you're getting a little bit of a more meaningful move. It's 2.2% down. It's only Tuesday, so it is early, but we're already right below last week's lows. In fact, the past 2 weeks lows, and in fact we're taking out some of the bodies here over the past month or so, and below the 20 period. So the way I look at this, this is sort of a bearish development here. Again, it's not a weekly close yet, but this would have me concerned and would be again, it's still a bit of a messy pattern here, but I do see the merits behind potentially getting short here or playing for a further breakdown, maybe back to retest these old lows back from October around 122. I think that's going to be a big level. We are at a sort of micro little trend line of support if you want to look at some of these recent lows here where we did hold, where a bid did show up every time we came crashing down into sort of this trend line here. I don't put a ton of weighting on that, but something to think about. So I think if you're aggressive or if you have some other motive here to get short the TLT, you're starting to get that excuse now on this breakdown today. Slight uptick in volume, down 1.3%. Follow through tomorrow might be what some of you guys would be waiting for. Commodities, USO, we'll go there next. We're up 61 basis points here in the USO. And like I say, I think this is an interesting setup to watch. Take a look here. This is the weekly chart now with the past 4 weeks really. We've just been kind of pulling off these highs, consolidating real tight, letting these moving averages catch itself up in the context of this midterm uptrend that USO has been in. So I'm paying attention to this consolidation. I think it's interesting. We've had range compression here for the past several weeks. If we start to get that expansion and that breakout above, say, 1160, 1165, below 1120 or so. I think either way you could kind of play that for a volatility breakout in either direction. So something to pay attention to. I think you get a little bit of an actionable price action pattern there. Natural gas, I think it's up on the week. Yeah, it is strongly up 2.68% on the week, but it had a pretty lousy day today, kind of giving back some of those early gains. I think this is in a tough spot here structurally. The trend has got a lot of momentum. There's been a tremendous amount of damage here in natural gas, so I think you got to be very tactical, very active, and pretty nimble if you want to play in this for a potential bounce. If you're seeing some divergences, you might find some opportunity there. But for me, for that more intermediate term style, sellers are still in control here until proven otherwise. I'd really want to see it back up around $5.85, $6 or so, and that seems like a pretty good move, just given where it is right now. So sellers in control there. If we go to metals next, you can see they're having a pretty good week so far, up 0.5%, getting some follow through from last week's reversal, kind of that rubber band stretching back up into some of these fast moving averages, and retesting is pretty important 120 level. I think I mentioned it last week that 120 would be sort of my line in the sand, or the level I'd want to see it get back above, and you can see it's basically retesting that now, so pay attention to that action. The weekly chart still still has plenty, just not so desirable right here, very flat moving averages, so I think you got to be a little bit cautious there, but I think it would be a big victory for the bulls if we could get some closes back above 120 or so. That would speak well to the bull case. Silver, kind of a similar situation. It is trying to hold up and tack on some gains from last week's reversal. Still has, still in a very tough spot though structurally, very messy in here, lots of supply throughout the year, all pretty much above price right now. So for me, if you're active, tactical, short-term trading this, I think there's opportunity, but otherwise, intermediate term, I don't see too much there from my perspective on any type of courageous overnight long holds. I think sellers are pretty much in control for silver as well. So those are... I think those are all the major markets that we just walked through. Let's take a look at some individual sectors. I think IYT is notably strong today and this week so far. It was very resilient today in the face of some selling pressure, almost closed flat, and it was holding on to the sort of the breakout day that it had last week. If you were to use basically some of the highs here and some of the wicks from last week, you'd see us breaking out to new highs. It had a strong move throughout late November, consolidated that mostly through time, and now it looks like it's trying to get going again. So IYT, I wouldn't sleep on that sector. I'd be paying attention to it if you want that long exposure. I think materials are also interesting. It had a nice strong start to the week on Monday. Gave mostly flat again today, but basically closing at new highs yesterday, and just gave back a little bit of progress here today. Would like to see a little more enthusiasm behind this, but XLB I think is sort of interesting there for potential rotation play. If we look at some of the other sectors, a lot of things are just kind of hanging out near highs now. We get discretionary ETF, which had the big gap up on Monday. It's just kind of moving sideways on some of those gains. XLF, oh, that ain't XLF. Let's go to XLF here. You can see pulling back a little more sharply, but still kind of consolidating at the upper end here. We'll have to see if this turns into a continuation pattern, or is this some type of short-term or intermediate-term top that's developing in here. I'd still favor the trend right now and say that the bulls are sort of innocent here until proven guilty, but we want to see that breakout above 28.25 or so on the XLF. Some of the individual banks are acting better than others, but as a whole, as a sector whole, we'd want to see that breakout to really be some wind underneath some of those other banks, under their sails, if you will. XLK also kind of pulling back here, but hanging out near highs. Again, these last few sectors we talked about, financials, technology, you can see they're all basically still trading right near their highs. They're giving back some gains today, kind of filling those gaps, but above an 8 and 20 period moving average, and less than 1% away from these highs. So you want to pay attention to these sectors as well. XLE kind of still hanging in here, but it is carving out. It is holding above the 68.75 level, above $69, above some of these fast moving averages. So you're getting that basing action kind of coiling up here for the XLE. Remember, it had that sharp sharp move throughout September. If you missed it, it's basically been consolidating now for 3 months. So if it starts to break out, if it starts to get that second leg rotation, that could be an interesting setup into the end of the year, maybe to start off 2018 as well, particularly as USO seems to be fairly primed here. I think it's something to pay attention to there in XLE. And finally, the last two on the downside is XLU. Remember, way back, we flagged this sort of lower lows and lower highs here and kind of talked about this, bearish development that started to get underway here at the very end of November, early December. And you can see that really has materialized, really picked up some steam to the downside. Now, truth be told, I said, I'm not interested in shorting utilities. It's just not something that I... it's not on the necessarily the high beta list of excitement for my type of trading. So I did not participate in this, but it is, pulling back. It did get that momentum. That series of lower lows and lower highs did morph into a nice little breakdown today. It's below the 20 period now on the weekly chart, so starting to do a little more structural damage here, something to take notice of. So keep that in mind if you're in it. There's some damage there. Short term, it's overextended. Could it bounce? Absolutely. But just from a structural basis, it is starting to get weaker and weaker there for those longer term time frames. And then finally, the IYR also seeing that damage today. And again, this makes sense, right? We had rates on the rise, so we had bond yields dropping off. So now we're seeing that spill over into some of these rate sensitive sectors. The IYR, let's take a look at this trend line. I haven't seen it in quite a while. So you can see over the past basic year of trading, we've been holding kind of in this trend line here. This could be pretty ugly here for a structural breakdown in the IYR. If it really starts to lose, maybe 79.50, you'd probably want to see it get a little bit more conviction here for this bigger pattern. But this channel breakdown here would be pretty ugly there for the bulls in the IYR if we do see that selling pressure continue. So that's all I have for today's video. Hopefully you guys are off to a good start for the week. Thanks so much for watching. As always, if you like the videos, do subscribe to our channel. Every Tuesday and Friday we do videos just like this, market updates, and go through all the major markets, some trade ideas sprinkled in between. So thank you so much for watching, and talk to you again on Friday.